Good morning. It's about 9:40 UTC on Wednesday, the 21st. So going through Bitcoin yesterday to today, obviously, we talked about, I think we were around about here. We started seeing the move up. It looked strong and good. What do we want to see failures of? Lower high, break a structure, retest failure off a cliff into that kind of liquidity that's building below us. So we've had a pretty decent grind up right now. So that's not looking terrible. However, the liquidity, long liquidity below us locally is getting very, very thick all the way down to 57K, which if we were to go to that level, that is a pretty significant like little break of structure. However, we are still squeezing, waiting for kind of like the bigger data that comes out tomorrow. Looking at it from a higher time frame perspective, just in the general liquidity sense or liquidation heat map, the shorts are still strong. I mean, we've been stacking quite a bit of short liquidity above us for the last almost 2 weeks, since we've had the move up on the, what was it, the 8th, 9th. So that doesn't look terrible. We do have that dead zone still at 65K. So if we do have that rip up, I would expect us to stop somewhere after we test some of these structures. But for the time being, there's some really local liquidity that's looking pretty juicy. We're still, like I said, we're still squeezing. The range play is still valid. However, it's getting towards the end. I think we're within the next, 24, 48 hours. We're looking for kind of a range breakout of the local structure. Looking at the economic calendar here, yeah, so we had the FOMC minutes come out. The big thing that everyone's looking at is for Thursday, initial jobless claims and existing home sales, followed by Friday, new home sales. Those are going to be kind of the three big things people look at. One thing also is that the Fed's suggesting to revise jobs down by 1 million potentially. I've heard that kind of like thrown around in a couple different articles. So keep an eye on that. It could definitely affect it. I mean, I think you guys probably know how I feel about the reporting. I think the reporting of their statistics is so skewed. The way they weight CPI data so incorrectly and unfairly that there's no real accurate measurement. It's just kind of like a scam in my mind, but it's still a massive expected volatility event. And I'd expect by Thursday, Friday, we break out of this local range. So looking at the game plan as far as trading light goes, um, yeah, so not a whole lot of resting order. 60.5 has quite a bit of stuff up here. So just on the order books, 1.27. I'm using that over the heat map. It's a little bit cleaner in my head. So a lot of resting shorts here, which would be nice. This actually coincides with some nice liquidation levels. Open interest has been allowed to build quite nicely in this zone, and we haven't had any type of like major liquidity events since yesterday. We had the move up, obviously, which looks some shorts, but the big longs got licked out when we had that flush down to like 56K for on the 15th. So in any case, you're still kind of squeezing into this kind of higher time frame triangle. Looking at TPO, actually, I'm on the 4 hours, so might as well look at the footprint. So the local footprint, we saw it coming in yesterday. Lots and lots of bullish buying, aggressive power. I saw a nice reversal, nice bearish engulfing 4 hour candle. It's always a great sign that you're seeing some failure. Perfectly retested and then completely cliffed. So beautiful stuff. There's still quite a bit of longs in play here. The volume's not too terrible. Came in pretty decently. A lot of the longs that are at the lows here are still in place. So this is kind of leading to the idea that if we do have failure, since the current 4 hour looks absolutely terrible, there is that potential for break of structure back to the downside because, like we saw on the liquidity map, lots of longs that could be liquidated just under the current price, which would break that kind of higher low structure, which would break the structure to down to 57K or 58K at least, and then potentially 57K. So there isn't a lot of resting longs in this place, but there's a lot at 60.5. So keep an eye on 60.5 as a level. TPO currently, yeah, really bad nuke. Went right back down to what is that? Monday's value area for retest 58.5. Very clean, very nice. Currently, we're just building liquidity on both sides, waiting for that New York market open. But for the time being, it looks a little bit rough, like it wants to run some lows. I'm expecting if it does run the lows, there's a potential bounce at the actual lows down here at 58K, a bounce back up, since the really juicy stuff is right at 60.5, which would be a great area for retesting, and then continuation failure potentially. So game plan, looking over at trading view. There we go. So I'm just showing liquidations levels here. Like these are the 100X's, these are the 50X's, and so on and so forth. This entire area is really allowing a lot of liquidity to be built on both sides, which is good. Ranges are painful, but if you can identify the high of the range, 61.4 and the low of the range, arguably 57K. Right. So for the time being, there's some local structure we be potentially looking to break if we have that move to the downside. So thinking about it in terms of liquidations, there's the high leverage pocket. This is to the upside right now. If we have a move up to like 60.3 to 60.6, 60.7, this does a lot of things. It tests the high structure that we came from. And I would love to see that perfectly tested and then fail to come back lower. Conversely, we're right in the middle of this local range. And then we have some pretty decent stuff below us. The difference here being that if we do actually go down to take this high leverage liquidity, we run the risk of creating a new low, which means that now we're breaking structure and trend from effectively upside trending structure. It would now become downside trending structure. So keep that in mind. It's pretty significant in case that happens. Other than that, the low leverage longs, there's stuff building below us. There's some big blocks above us, obviously, which we saw. I would expect price to reverse once we hit 63, 65. There's a local breakout. But for that to happen, we have to get through the heavy resistance at 61.4 to 61.5. So this range high is incredibly, tons and tons of supply. So keep an eye on that. Yeah, I think the big thing here is just, looking at these. If we do have breakdown, look at these liquidity dead zones. Liquidity dead zones are where price often reverses because there's not enough fuel for continuation down. So from yesterday to today, I'll go on a lower time frame here. And so from yesterday to today, we talked about the move down. It didn't quite go as deep as I wanted to. Went to about 58.5, not 58.3, but still to get a weekly open retest. But still, it looks okay. There's a local inflection point. I'll go ahead and turn those off and look at the local, the game plan for today. The general plan, which we talked about, it's like retest of the highs and go lower. That's still valid. If we have a localized gain here of 59.5K, so prices down here at the daily open, this is the major inflection point. If you get a bearish retest and then fails, we want to see lower, potentially the weekly, potentially to sweep all of these lows into that liquidity. Then we should, if we sweep all that liquidity, we should see an immediate bounce. But if the bounce doesn't regain previous weeklies, we want to see that kind of continue back to the downside and create new lows overall. Some of the inverses of this, obviously, main levels to keep an eye of, 58.3, that's the current weekly open. And then 59.5, that's where we have a lot of levels, a lot of important structure to regain. So the gain at 59.5, we do that first. I want to target higher, probably 60.5 at the minimum, potentially all the way up into this heavy resistance and some local liquidity. We could see that snap projection back down, create a lower high, lower high, lower high. We've been doing it over and over again. So I think those are the major points here to kind of keep an eye on. Any breaks of the low, like if we create a new low here, that potential for a bearish retest and then a flush of all the local long liquidity back to 55K is still viable. So for me right now, conversely from yesterday, which is pretty clean as far as like we're at resistance, look to short it to go back down, which worked out great. We're middling in the middle of the local structure. So we're in the range. If you're looking for something really tight, look for, failures underneath the daily open. There's a lot of support growing below that and a pretty decent amount here at 58K. So until 58K really fails, we're technically still upside trending. If the moment where there's a new low created here, I would expect that we start doing some bigger breakdowns and start sweeping liquidity in the previous ranges. On top of this, there's two other factors I'm looking at. TradFi has had a pretty decent upside move for the last couple of days, big, strong recoveries, but they're quite toppy looking and they need to have some retracement. Conversely, the volatility index, the VIX, is starting to swing back to the upside, and the dollar currency index is also starting to do some lower time frame swings back to the upside. So generally, VIX and Dixie, when we think about those, they're loosely inversely correlated to the market. And if they're starting a 4-hour plus time frame swing back up, we'd expect the markets to react a little bit more negatively. So keep an eye on that. Keep an eye on the data that's coming out tomorrow. And like I said, I'm expecting this entire range to break in the next 2 days with all that data. So until then, take it easy. Play the range. If we get back at the lows and we don't lose the low, free long back to the upside. If we pop back up into this structure, until that's broken, free short back to the downside. Like I said, play the range till it's broken and wait for it to start trending again. That's it. Peace out.